Good afternoon. It's Wednesday the 22nd. I have my test tomorrow. That's why I haven't been doing videos answering questions. As soon as I finish, I will get back to that. But I've been getting questions of or statements saying that we're not making money. What are you doing? How is this working for you? What's your secret ingredient? And I appreciate the questions. I want to help everybody. But this market, it doesn't take a neuroscience scientist to figure this out. It's pretty darn simple. You know, you don't need 20 moving averages or 15 indicators on your chart to find out what the trend is. You could look at a chart. It's either going up, down, sideways intraday, meaning a 1, 3, 5 minute chart, or you switch to a 30-minute chart, 5-day, and the trend's either going up, down, sideways. So if it's going up the last 4 days, we're going to look to buy on dips, as long as all the trends coincide with each other. It's pretty simple. But now we've come to an inflection point in the markets because we've sucked everybody in. You know, I remember the whole way up until now. That's why I had to do this video right now. Everyone was bearish on the market. No matter how far we went up, no matter how many times the Fed came out and said we're going to continue buying treasuries and MBSs, people refuted what Bernanke was saying, and they continued trying to short rallies in the market. Well, now the inflows have been increasing in the mutual fund and private equity markets for the past couple months at an increasing rate. And now we're starting to get hints from the Federal Reserve that we're going to start tapering off on purchasing MBSs. And we're going to try to do some kind of a passive runoff. Now, if you don't know about bonds, do your due diligence and study. And I'll do more videos to help out in the future. But this is just a short video. How do you make money in this market? I will show you. I pull up CNBC.com. There's no trick in this. I look here. Fed minutes, members mold tapering as soon as June. This means that they're going to start to not purchase as much debt as they were before, right? So what's been happening since 2008 and the market collapsed? Everyone with high interest rates saw a 3% 30-year and knew they could get, with somewhat of a decent beacon FICO score, 3 to 5%. So why wouldn't they refinance? Well, now that everyone's done that, foreclosures, right? They've got a lot of the shadow inventory off the balance sheets. So now it only makes sense once the market has been elevated to these levels to start pacing back. Maybe certain companies you could still buy, but what happens is bonds work inversely from interest rates. If interest rates go up, bonds go down. You buy puts in the bond market, you sell bond futures, you put on synthetic hedges, whatever you need to do. That's how it works. The reason people lost everything during the collapse is because they were uneducated, uninformed. They should have been making money, or at the least they should have been out of the market. Well, right now is that inflection point. So not only am I warning you to be cautious, but to really start researching the bond market. So I look here, and everything that's going on, we need to watch the Federal Reserve. Stop watching the economic indicators. I mean, still watch them, but you have to only focus on the Federal Reserve. Go ahead, buy you a $5 day plan or a large calendar, whatever it is. Go to all the Federal Reserve websites and write down every single meeting that they have, and find out how you can listen to the audio or find a transcript from every meeting, and that's how you have to trade this market. So now we're going to look at a chart. Bernanke comes out at 1. In the first 15 minutes, he starts talking down the tapering and everything, and we see the market collapsed. Is it going up, sideways, or is it going down? It's going down. So why am I going to buy the market? Why would I buy the market? I just don't get it. Because your indicator told you to? Because maybe we could catch this bottom? Because maybe the buying's going to continue? Maybe the pundits on TV are sitting there saying that you need to buy every single dip? trade what you see, not what they say. And I'm going to prove it. I'm going to short this. I'm going to short it. I'm going to make money and show you it's that simple. And then I'm going to get back to studying. Right? So here we are. 5-day trend's been up, of course. You could try to make a case over why I should be looking to buy this dip, but the intraday trend is clearly defined. Bernanke talked about interest rates. It wasn't good, so let's look for a short. Alright, we're at a pivot level. That's why you see some consolidation right here. Alright, 5. What are we going to do? Can I get hit at 25? Or do I have to chase? No matter what, I'm shorting it right here. Okay, let me pull it down to 5. Alright. Now I have it at 50. Come on. Alright, they're taking it down. I can't get involved with this. I'm going to have to wait on the next part of. And by the way, I tried to put this one on tape, but the audio was not working, so that's why you see this. And this was only one other trade. I only looked at the markets once Bernanke was speaking because the test is tomorrow. Okay, down to 3. Can we hit a 75 or what? Got an order out there at 3 to short. Look at that. Look at that down move. Alright, they hit me at 3, short 6 contracts. Let's see if we get hit at 2. Alright, got hit at 2. That's it. There you go. There's my little, I guess you could call it some kind of knowledge. I put it to you. Maybe a little more aggressive than I normally do. I'm going to do more videos focusing on teaching you what you need to know to make money in this business. Good luck trading, and I'll talk to you after I get done with this test tomorrow. I'm going to pass. Bye, traders.